You're still watching TVC News at 1. Let's turn attention to business now. The Central Bank of Nigeria has disclosed that the federal government spent a total of $15.5 billion on debt servicing between 2019 and 2024. According to CBN, a total amount of $588.3 million was paid for the first 5 months of 2019, while $5.4 billion was paid for 2020. The report also reveals that debt servicing payment continued to rise in subsequent years, with $2.02 billion paid in 2021, $2.34 billion in 2022, and $3.43 billion paid in 2023. The data shows that between January and May 2024, the country paid $2.18 billion in debt service, marking a 270.9% increase compared to the first 5 months of 2019. Meanwhile, the Fitch Ratings Agency has raised concerns about the country's debt sustainability, predicting its external debt servicing will escalate by $400 million to $5.2 billion next year. Elsewhere, Dangote Industries Limited has accused international oil companies in Nigeria of doing everything to frustrate the survival of Dango Refinery and petrochemicals. Vice President of Oil and Gas, Mr. Edwin Devakuma, discloses at a one-day training program organized by Energy Editors. Mr. Devakuma added that the IOCs deliberately discouraged the refinery's efforts to buy local crude by jacking up high premium prices above the market price. He also lamented that the activity of the Nigerian Midstream and Downstream Petroleum Regulatory Authority is granting licenses indiscriminately to marketers to import dirty substandard products into the country. However, the refinery vice president calls for the federal government and regulators to give necessary support to create jobs and prosperity for the nation. According to the latest data from the Debt Management Office, Nigeria's public debt has risen by a staggering 24 trillion naira in just 3 months, a significant increase in the country's financial landscape. The MD and Chief Business Officer Optimus by AfriInvest, Mr. Ayodeji Eba, while speaking on our flagship program, Business Nigeria, raised concerns about the potential impact of this rising figure on the country's economic growth.
The sector put down their funds. There are critical issues that needs to be solved. The first one, insecurity. No one would be comfortable to commit funds when the insecurity level is at this current level. And even if they are committing funds, they would also be very mindful given the current level of insecurity. Secondly, there's also a need for us to also take care of the bottlenecks. The infrastructural deficit is still very high. You look at the logistics. You spoke about export earlier by the first guest. What are we doing to decongest the ports to ease export? Those are the things that would. So when private sector see that the environment, ease of doing business is very considerable, then they will be able to commit funds. So government will not need to be borrowing significantly to provide some of these services.
Outside Nigeria now, global shares steadied earlier today ahead of U.S. price data that investors are banking on to show a renewed moderation in inflation, while markets were on alert for Japanese intervention as the dollar tested the 160 yen barrier. The MSCI's all-world index was flat, having fallen for the previous 2 sessions. In Europe, the stock 600 edged into positive territory, while U.S. index futures were up by 0.1%. Japan's Nikkei closed up by 0.5%, with the continued decline in the yen putting pressure on the Bank of Japan to tighten policy despite patchy domestic data. In another development, thousands of passengers were left stranded late yesterday after a power outage caused chaos at Manchester Airport, with up to 90,000 travelers affected as flights were cancelled and scheduled arrivals diverted. The airport managing director, Mr. Chris Woodruff, has tendered an apology for the outage and attributed the power cut to a cable fault while the airport has resumed operation after power restoration.
20 minutes before boarding, we were told that we're not boarding now and it's fully cancelled and there'll be nothing leaving here to go to Turkey.
You've got to make the best of a bad situation. It's not the airline's fault, it's not the Manchester's airport's fault, it's no one's fault, it's just one of them freaky things that happen.
Now, U.S. prosecutors have recommended that the Department of Justice bring criminal charges against Boeing for violating a settlement related to 2 fatal crashes of the 737 MAX plane, which the firm denied. The Boeing declined to comment when contacted by the newsman about the prosecutor's recommendation. The Department of Justice last month told a federal court in Texas that Boeing had violated the terms of a 2021 settlement in which it agreed to pay $2.5 billion in penalties and compensation to airline customers and families of those who died in 2 fatal crashes. According to the court filing, the aircraft maker failed to design, implement, and enforce a compliance and ethics program to prevent and detect violations of the U.S. fraud laws throughout its operations. The crashes is one in Indonesia in 2018 and another in Ethiopia in 2019, killing a total of 346 people. China and the European Union have agreed to start talks on the planned imposition of tariffs on Chinese-made electric vehicles being imported into the European market. The European Commission trade spokesperson Valdis Dombrovskis and his Chinese counterpart Wang Wentao in a statement said both parties have agreed to discuss the anti-subsidy investigation into battery electric vehicles produced in China. Meanwhile, Germany's economic minister, who also doubled as German Vice Chancellor Mr. Robert Habeck, who is on a state visit to China, says European Union's proposed tariffs on import on EVs from China are not a punishment but compensation for the advantages granted by the Beijing to Chinese companies. The EU's interventions comes after the US made the much bolder move of raising a tariff on Chinese electric cars from 25% to 100% last month. In the crude oil space, prices firmed slightly earlier today as traders weigh support for expected summer demand and geopolitical tensions against a stronger dollar. U.S. West Texas Intermediate rose to sell at $81.04 per barrel with an uptick of 0.38%. Brent crude futures also experienced upward price margin of 0.39%, selling at $85.57 per barrel. And Bonnet experienced an upward price reveal of 0.71%, selling at $86.08 per barrel. And for the OPEC basket, crude oil dealers are offering $84.50 per barrel with an upsurge of 1.73%. Well, and that's all for business. Coming up next is sport. Please stay with us.